Welcome back. Today, we are diving into something that sounds technical, but is actually a massive deal for anyone hoping to buy a home, especially women.
Yeah, serious alarm bells are ringing in the housing world right now. We're talking about the CFPB proposing changes to the Equal Credit Opportunity Act, or ECOA. Exactly. And while regulatory proposal usually sounds like a snooze fest, this one is waking everybody up.
So, what's actually on the chopping block here?
Well, the Consumer Financial Protection Bureau wants to clarify lender responsibilities, but the headline is that they want to stop recognizing something called disparate impact claims.
Disparate impact. That's the legal concept, right? Break that down for us.
So, disparate impact allows you to challenge a policy that hurts a specific group, like women or minorities, even if the lender didn't intend to discriminate. Right, so it catches the accidental bias. But this proposal would basically say, if you can't prove we meant to be mean, you can't sue us.
Precisely. It removes that safety net for borrowers.
And this is where the history lesson comes in. Nikitra Bailey from the National Fair Housing Alliance put out a video reminding everyone why ECOA exists.
It's wild to think about, but before 1974, a woman often couldn't get a mortgage without a male cosigner.
That wasn't even that long ago. Bailey's point is that these rules are literally what gave women financial independence. Rolling them back feels risky.
It gets deeper. The proposal also tightens the definition of discouraging applicants.
Meaning what exactly?
Meaning it reduces the situations where a lender gets in trouble for saying or doing things that scare people away from applying.
So they could potentially be more subtle about saying you're not welcome here without facing consequences?
That is the fear, and the industry is reacting. Faith Schwartz, a huge name in mortgage banking, shared Bailey's video on LinkedIn.
And from what I saw, people were shocked. It seems like this proposal kind of flew under the radar until now.
Yeah, the comment section was basically a collective, wait, what is happening?
The National Fair Housing Alliance isn't holding back either. Lisa Rice, their CEO, used some very strong words.
Strong is an understatement. She called it unconscionable and a death knell for lenders.
A death knell? That is heavy. She's arguing that disparate impact is actually a tool that helps businesses grow by keeping them fair.
So why is the CFPB doing this? It stems from an April 2025 directive from the administration.
Right, the order to stop using disparate impact liability. The argument is that worrying about disparate outcomes stops businesses from making merit-based decisions.
They claim it encourages favoritism, so they want to stick strictly to did you intentionally discriminate.
It's a classic clash of philosophies. One side says we need these rules to uncover systemic bias.
And the other side says these rules are red tape that hinder the free market.
But, as Lisa Rice points out, eliminating the effects test strips away the most powerful tool for finding bias that isn't obvious.
If you have thoughts on this, the clock is ticking. The comment period ends December 15th.
That is right around the corner. If you care about fair lending, now is the time to speak up.
We'll keep tracking this story. Thanks for listening.